Hi, everyone, and welcome back to another episode of Unlocking Venture Capital. I'm here with Simon from 500 Startup. Hi, Simon. How's it going?
Good, good. Thanks for having me.
So Simon, just like me, likes to go back and forth from New York and Canada a lot for a lot of his work, and he has this great experience in terms of operations and bringing 500 Startup to a whole new level here in Canada. So would love to learn a little bit more about what you have done in the past to bring you here today in the VC world.
Yeah, 100%. So, my background actually started as a founder. So I've built startups both in the Canadian market and in the US market too. So that's really kind of what started the whole kind of tech bug, for lack of a better word. Going down the path of being a self-taught engineer, being a technical founder, I found myself after exiting my first startup kind of veering towards the venture path. And basically, yeah, got a call from 500 that they were looking to kick off in the Canadian market. We hadn't really built out robust kind of methods for gathering deal flow, for finding companies, for running some of our accelerator programs, or managing any of the relationships in the region. So really saw that as a great opportunity to kind of return home to obviously kind of where I'm born and where I'm from, and be able to kind of move back from New York and kind of start splitting my time, especially with the West Coast in Canada. I was originally kind of out of the GTA, but obviously with 500's presence being primarily Alberta led, spending a lot of time in Calgary and Edmonton and working with West Coast founders.
So talk about how because these are much smaller cities and 500 is a really big brand in the US. So in terms of like fulfilling all those partnerships, creating all that ecosystem out in the prairie areas, how was that for you? How was that experience like in your shoes?
Yeah, no, it was an awesome experience, especially over the past three and a half years. It's been unbelievable seeing the Alberta market just explode. I spent some time living in Vancouver, and there's probably uh, to put it nicely, there's just no more disappointment that I could expect in a tech ecosystem than Van and BC as a whole in terms of the startup ecosystem, which is like such a disappointment when you look at like the just the disconnect between like the provincial government and some of the investment arms that are trying to deploy capital there and the founders themselves and how much support or lack thereof they're feeling.
Yeah.
And Alberta took like the polar opposite approach. So Alberta Innovates was one of the government funded entities that really went above and beyond within the existing kind of confines of both municipal, provincial, and federal government hierarchies and policies to allocate capital to both kind of a fund to fund models, attracting the right offices, to the founders, attracting them to the region, non-dilutive options for fundraising, and really bringing a lot of education programs, accelerators, incubators to really bolster up what that pipeline looks like in terms of growing the tech ecosystem. The first startup I had built was actually in Edmonton, way back when I had dropped out of the University of Alberta, and seeing that like night and day shift to where it's at now versus when I built the first time, it's crazy. And really, the only market, in my opinion, in Canada as a whole that really rivals it ends up being Toronto, and it ends up kind of being just a very different dynamic because once again, it's so government led as opposed to just solely investor or founder led and so on, that they're just putting quite a bit of like supports, not just capital, into kind of the success of these founders, especially over the last almost 4 years now.
Yeah, and it's so interesting that you bring up all the government relations when it comes to founders in the Canadian ecosystem. So, when I was a founder as well here in Canada, it was everywhere around you. People were talking about the different grants, people were talking about the different subsidies and the government involvement, right? And then when I went to the US back and forth a lot as a VC, it was so interesting because even when you are providing them all of these different resources, shred credits, R&D kind of credits, all of these different things that governments from them actually do provide, they had such a strong presence when it came to private money. So from venture capitalists, from angel investors, SPVs, things like that, that was just the number one go-to source as opposed to all the government politically led initiatives. So in Canada and the US, I have found those contrasts to be really interesting. And it was also really interesting kind of how you would be building with these different forces on both sides of the border, you know?
Yeah, and I think part of it also comes down to just the fundraising climate and like investor decision making process of backing earlier and earlier stage founders is just so vastly different.
Yes.
Like you see it a little bit in like Asia and Europe, but especially in like Canada, it's so surprising of the difference between, what pre-seed or like seed
Yes.
looks like in the
Yes.
US versus Canada.
Yeah.
Valuations aside, the terms aside, you're just looking at, to really boil it and simplify it, how much call it traction and or validation does a founder need to be able to raise their first round of institutional funding?
Hmm.
And you have to be quite a bit further along. Obviously I'm generalizing, the US market. It's obviously going to be
You
different
are on
East Coast
point.
versus West Coast versus Midwest and so on. But,
Yeah.
just comparing the tier one markets in the US versus the Canadian market, founders have such a tough time those very early stages. Obviously, some of these AI tools have made a difference for removing some of the barriers to commercializing products and getting some of that early traction. But that's really been the big impact where I think the government kind of bridges a nice gap. Mind you, there's still improvements that can be made. By no means is it a perfect system, but
Mhm.
in the US, you're definitely able to fundraise a little bit earlier on in the process, assuming
Yes.
you have the team, the domain expertise, and so on. So I think that's kind of where the government saw an opportunity to step in, right, on like kind of technological development supports.
Yeah, absolutely. And you hit it right on the head where the way that we are defining what is pre-seed, seed, series A on both sides of the border are vastly different. The things that we're expecting from founders are vastly different, right? And so for example, one of the funds that I worked at, for you to be considered a pre-seed, you had to have MRR. You had to have a consistent level of hockey stick like MRR in some way, shape, or form, right? And if you weren't, and if you didn't, then they are counting that as you didn't really validate the problem enough. So there was almost no founders, I think, probably no founders that I personally know who were able to raise any amount, even an angel round or a family and friends round, when they were just at idea concept. Was that also similar to your experiences?
Yeah, I'd say, maybe it evolves a little bit depending on like the strength of the founding team. Obviously, if you have a absolutely stellar team with really a strong, unique edge and understanding kind of the problem or where you're commercializing into in terms of like the initial channels or the initial relationships, especially in the case of like a B2B SaaS model.
Yeah.
But more often than not, it's 100% that, you're just looking for inherent traction. Like I said, I made that comment around AI tools with Cursor coming to market, with workflow automation softwares like Zapier or N8N, with agentic AI and the move towards that as well, you're able to offset, not fully remove, but at least offset and complement a lot of the dev work that goes into commercializing an initial MVP, that goes into getting like that first amount of traction in the door. So I think especially over the last like call it 18 to 24 months,
Mhm.
that's impacted it even more so, right? That by the time a founder is knocking on the door of 500 and being a part of the Canadian program,
Mhm.
that's what we're looking for, right? Like it's inherent that we're more focused around seed. Where I would make the argument for the U.S. and our flagship fund that it veers a little bit more pre-seed with a seed mix, right? We see a founders from kind of both sides of the coin, but that's definitely not the case for Canada.
No, absolutely. And I think that all the things that you are bringing here to this side of the border and have built over time is really great and beneficial for all founders going forward, back when I was a founder, it was like 2016. It was so different here in terms of entrepreneurship and venture, and things were still very, very green, I would say. And so then the kinds of recognitions and the kinds of programs that were available were so different than they are now. And so having more programs here and available and accessible to more Canadians, I think would encourage the level of entrepreneurship so then we can level up. One of the things that I know that you and I have shared in the past before, which was that when we went to a giant ecosystem, let's say New York, we learn from our peers. We level up because we get to have all this great absorption from our peers, our network, and things like that that were over there. And I didn't always feel like that was the case in terms of my learning and growth here when I was starting out as a founder, and I just didn't know all the resources that were then available. I would love to learn what were the first things that you felt that you were learning, either as a founder or as an investor, when you went to this massive ecosystem.
Yeah, I'd say probably the main thing really just ends up being like the power of the network.
Yeah.
In my role at 500, I had to spend a lot more time in kind of the Bay Area West Coast, even more so than in New York.
Mm.
And it's really just the power of like the other founders that you're able to meet and interact with the investors that you're able to meet in close proximity. It's just kind of the vibrancy and energy of these ecosystems because they are so diverse and there's, at the end of the day, even in the Bay Area, there's always something going on, almost to the point of a detriment that it can be such just full of distractions.
Yeah.
But at the same time, it really is the power of that network because as you're going out to raise, your first institutional round, you're not starting cold. You're not
Yeah.
sending those first emails, those first messages. You've sat down, you've had the right coffee chats, the right investor conversations, the right warm introductions. You've introduced the vision that you're building upon and already executed against it and started to build that trust at the outset. And I think that's the big differentiator, right? Is that you have such a density, whether we're looking at like New York or looking at the Bay Area of these different investors or other founders that are building. And it kind of creates this little bit of like a mindset shift to building in that market.
Yeah.
One of the kind of frequent exercises that we would do through the Canada program is usually like some degree of like immersion trips into Palo Alto,
Oh,
and sitting down with like our flagship team there, the founders that are in those cohorts, working together, meeting with different corporate partners, whether it be Stripe or anyone else under the sun, and it's just like being immersed in an ecosystem like that, you understand kind of the nuances and the differences of also who else you're competing with. Because I don't even mean necessarily competition from like a product or solution standpoint, but competing with in terms of VC dollars. And it's a wake up call for a lot of these Canadian founders that have maybe been a little bit too accustomed to like the Canadian bubble, and
yeah.
building like in this local market, where by far the vast majority of successful founders that are moving into growth stages fundraise in the US and start to
Absolutely.
build out some kind of US representation on their cap table at those later stages. So it's ripping off that band-aid earlier than later. I think they start to understand really the salesmanship, especially that exists in US founders.
Yeah, I love that. And that's a really great thing to be able to have. Back then, I think the only one was this like a female founder program that brought, I think, like 6 or 8 founders to Palo Alto for like 1 week because I think that's all they could afford from the government program. And then they would
Yeah.
bring them back, and this was like sponsored, and then they would be set up with a bunch of different meetings, kind of thing. But they themselves then wouldn't naturally go out to build their network and have that network effect for them personally, right? Because it was kind of like you're going on a field trip, and therefore these are the stops of this field trip. And so
Yes.
having that like very specific structure was just also very different from the way that you and I do it too. Which has a lot more flexibility and fluidity and serendipity in a way, in terms of how we're building that out. So I really love that. I did get to read a great article that you wrote, and I would love to get your deep dive into this. It was about why it was important for founders to understand how venture capital model works. So why is that important?
Yeah, yeah, no. It's a great question and something that I've seen kind of like keep coming up over and over and over again, especially with like I said, the founders in Canada, yes, but even just the international founders that are looking at raising in the US market. So I've had the opportunity with 500 to work with some of the founders in Taiwan, Korea, as well as Egypt, and it was so interesting in those markets because it's the same thing. They're looking at like, hey, we put the US on this pedestal. We want to grow in the US market, sell into it. We want to be able to fundraise. We want to be able to fundraise on the backbone of like kick-ass US VCs, essentially, or angels, super angels, kind of wherever you want to kind of draw that line. And the lack of understanding around the business model as a whole is as far as just like uh what multiple do they need to realize on my investment, right? That
Yeah.
I'm not, gathering their investment to build a lifestyle business. There's a disconnect there, right? Disconnect on like what does portfolio support look like or value add, right?
Yeah.
Especially if they're not an investor that just specializes within the specific sector that you're within, right? So understanding like the allocation of who are the right investors, where is the right value add given the stage that you're at and what you're looking for, right? Is it sales led? Is it partnerships led? All the way down to what does their actual exit strategy look like who are they reporting to, right? And how are you positioning yourself under the expectation of like what are their mandates, right? What have their LPs set as expectations with them, not just in terms of your average returns and kind of time frame for liquidity, but just as a whole, right? Even around what types of investments, what thesis they're allocated, right? This I think one common trap that especially plagues international founders is this kind of just spray and pray approach with fundraising, right? A lot of them choose to come to Silicon Valley for a fixed period of time. It's usually fairly short. They just try and hit every investor, every outbound channel as much as possible, and they're just, not even aligned to their thesis, right? And
Right.
it just becomes such a point of concern around not doing the research and just shooting where there's actually a potential fit. And I think all of this really comes down to understanding the VC business model around the relationship between GPs and LPs and what the defined thesis is, where they're at in their fund life cycle, if they're actively deploying or not. All of these questions are they're pretty easy to ask in an initial call, or even for some of them, they're pretty easy to find online as
Yeah.
readily available information. And I think it just makes it so much easier as a founder. And that's really the difference between like, hey, I had to reach out to like whatever thousands of investors as opposed to, I reached out to 50 to 100 and, booked X amount of meetings. It's just doing that diligence and that work up front.
That's true. And I think it causes so much like investor exhaustion on the other end as well. Were there particular resources that you would recommend founders who are looking to raise to check up on making sure that their investment thesis actually does fit the kind of startup that they're building? What comes to mind for me is Crunchbase, but I'm sure that you have others that you share at 500.
Yeah, I think there's like quite a few to look up on. Obviously, like Crunchbase is an easy one or PitchBook, but one other one, I think it was OpenVC was one that
Mm,
I've seen used
yeah, they're
quite
great.
frequently in the past, isn't too bad. And then honestly, a lot of it does also just come down to like you can create the partners and or the GPs a little bit on like LinkedIn or
Yeah.
like just give them a Google. Like you're most likely going to find some kind of poster data, especially, when did they close their fund, right? Work backwards to when the fund closed to what today's date is and understand, the fund life cycle, for example. Look back and like the partners, especially on like LinkedIn, are most likely speaking about some of the investments that they're proud of or some of the things that they've recently deployed into. So you're starting to already immediately understand like, where are they at in the fund life cycle? Are they still actively deploying? You can start to look at the portfolio companies they're deploying and understand like, are those companies at all remotely similar to what I'm building in or not? And then
Mhm.
obviously, in addition to that, checking out the fund's website and so on. But usually that's kind of the last source of info. The majority of these funds don't have great sites. But overall, like doing a little bit of that digging, like I said, I don't know how long it actually takes, maybe 5 to 10 minutes per fund to at
Yeah.
least get a surface level understanding of life cycle, who the team is, who the decision makers are they actively deploying, and what the thesis looks like is definitely well worth the exercise because then, especially if you're looking to get a warm introduction into the fund, you've kind of validated a lot of those points that you're going to be then asking someone else to kind of put their name on the line to get you in the door, that you're at least a semi fit
Yeah.
for, the given stage that they're investing at in the sector and so on.
No, absolutely. And there are so many, I think, misconceptions that you've touched on in the article that I really love. I also, did a podcast on that as well as why founders should know how a fund really operates, how it really works, because it doesn't really make sense. If you don't know everything about your customer, how are you selling to them? And in a way, when you're fundraising, that is your end customer because you're trying to get them to do something that is to your favor, to the favor of your business, right? And so absolutely, I think that there always should be more information out there. And it really is up to the founder to be able to show how much they can curate well and how much they can research everything well in accordance to their business. Otherwise, you're right, it doesn't make any sense.
Yeah,
Um,
yeah.
I would love to better understand, in terms of where you're seeing seed stage Canadian venture capital Canadian companies go to next. Do you think that there'll be more money on the seed stage from VC side in terms of investment? Do you think that in the future people are going to up grants based on the policies that you've seen changed over the time, or do you think that people might continue that trend that after seed stage they're going to go into the U.S. and or other markets in order to raise their growth stage fundraising?
Yeah, yeah, yeah. It's a spicy topic, and we could probably spend at least a few hours on it. But to be honest, like my pessimistic view is I don't see things changing in the immediate for like the Canadian market.
It's glacial.
I think it's going to be tremendously difficult to compete against the U.S.
Yeah.
I think anyone that is succeeding when you look at like the talent pool available, the capital available, the where the acquisitions are actually occurring, and where these liquidity events are occurring, almost everything is centered around the U.S. If
Yeah.
you were to ask that about a market that's maybe more geographically isolated from the US, I'd say maybe there's a chance, but even then it's going to be very difficult to match the just the capital availability, the LPs that drive that capital and the fundraising effectiveness, and obviously the government incentives and so on. So I would just say, given the geographic proximity, given the fact that this is already the norm and occurring as companies are transitioning from kind of early stage to growth, they're closing their Series A. Typically, a part of that A allocation, if they're not already selling into the US market, they are now.
Mhm.
And as they're approaching growth stage, they already have material US traction and Canadian traction, if not traction outside of kind of the Americas as a whole.
Yeah.
And they're going to continue that momentum. Where are they going to get better valuations, better terms, more competition on the deal? It's always going to be the US. So I see a lot of factors kind of tailing into why that makes the most sense.
Yeah.
I think a lot of founders make this mistake to try and move into the US too early when they don't even have solid Canadian traction, when they haven't fundraised in their own backyard. I think those are all red flags. If you can't raise around in the Canadian market and you're trying to go raise in the US, you're just going to have a more difficult time. Not to say that it can't be done, but I think with all of these trends and these shifts around where the liquidity events are occurring, where the bigger funds are, as well as where a potential customer base is, both in consumer facing and B2B models, the U.S. market is going to kind of take the cake.
Yeah.
And I think it's going to be very difficult for Canada to kind of be able to alleviate that. So if anything, I see the Canadian tech ecosystem evolving to, more and more early stage support and building, amazing early stage companies. But I still do think that the US is going to take ownership on kind of the growth stages of investing.
And I have my own opinions about this, but how do you think that would affect future Canadian investors? Do you think they're gonna, double down on more of their strengths? Do you think that they're going to change any part of their investment thesis? How do you see it when you have been working with other Canadian investors as partners and in terms of the ecosystem that you've seen here?
Yeah. Well, I think there's definitely a positive, regardless of the company, grows and becomes successful in Canada or the US. Liquidity is liquidity, and
Yeah.
especially with the rise of secondaries now, being able to open up and liquidate a position earlier than expected in terms of your 10-year fund horizon,
Mhm.
and actually get, convert some of that TVPI to DPI and actually pay something out to your LPs. That's still a positive if they're moving into the US market and bringing on larger names in their cap table that are, material in nature and backing these larger rounds and US market expansion. So I do see it as a positive. Obviously, that's with the caveat that you're investing in the early stage space in a Canadian market, so you're already on that cap table. I think for Canadian growth stage investing, it would be tremendously difficult given who you're competing against,
Right.
especially even when you just look at, valuation of terms that are
Yeah.
being cut there versus here,
Yeah.
and even just the inherent like co-investors that are coming in on these deals and what the competition looks like. But for early stage investing, I think there's still an amazing opportunity, especially within the pre-seed and seed realms. Mind you, you're having to account for higher failure rates. You're needing to account for founders that have the network and the ability to move into that market and
Right.
or already have traction in that market. So it does kind of go back to that more like risk averse appetite of like Canadian early stage investors wanting to see more traction than maybe some US counterparts. But overall, I do think like the move and the benefit for Canadian early stage investors is very apparent, regardless if the Canada builds to kind of a centaur or unicorn status in the Canadian market or the US market.
No, absolutely. And what are some of the challenges that you've seen from some founders that were then either fearful or haven't moved to the US market when they actually could have based on the stage that they're at?
Yeah, just in terms of like kind of the fears that the founders have or kind of the team
Yeah.
as a whole, or okay.
Yeah, mostly the founders,
Um,
I guess.
yeah, yeah. I'd say a big part of it is just around the problem, right? That like this problem exists to the same degree, and the willingness to pay also exists to the same
Yeah.
degree that it has for them in the Canadian market. Just because
Mm,
your business model works here doesn't necessarily mean it's going to work there. Maybe this isn't so much just specific to Canadian founders, but I was actually chatting with our GP Clayton from 500 that's on our flagship fund team in Palo Alto when I was prepping for one of the keynotes that I was doing for Korea University in Seoul and in Jeju Island, and we were chatting about like Korean founders trying to expand into the US and like validate their business model, right? In terms of some of these startups, especially consumer facing startups that are, say, in like the cosmetic space, they have a really, really tough time because even just things like cultural relevancy for the product that they're commercializing just isn't there and isn't kind of a one-to-one comparison for the US. And I think that could be also seen even when you look at like B2B models, maybe not to the same extreme, but understanding like, what does what does the kind of target base look like for customers? And who are you actually able to validate this problem with in terms of pilots and so on? So I'd say that would be the first thing is just like relevancy and fear that like, hey, I'm going to move into this market. We're not going to have the same success, the same business model and pricing we've been running. And
Mhm.
then the second part really just ends up being just doing it. Like so many founders are just like scared to do it, like in terms of just do some sales, right? Like outbound sales is the norm, right? Like kind of take this like more founder mode led approach, pick up the phone or do the emails, put in the legwork that is cold in nature to run those initial pilots, right? To get that initial traction and taking that first step into like, hey, we are deciding that we're moving into the US. These are the states and customers we're targeting and starting to do that and getting feedback and getting rejected along the way as opposed to being stuck in this like relentless cycle of planning, I think is something that often I see as kind of a fear or just something that ends up delaying kind of that decision for some of these like early stage seed stage Canadian founders that obviously have traction in this market.
Yeah, these are really good points. And it reminds me of this quote about rejection. If you knew that it was going to take you at least 50 no's to get to your yes, how quickly would you want that no to come?
Yeah.
And I think that it really helps, especially like founders who are reluctant to take these various steps because they know that there's going to be a lot of rejection along the way. So you really hit it on the head. And I love all the great tips and resources that you've provided for us today, Simon. Thank you so much. I love sharing your wisdom with people, and I think that it's super, super helpful for both founders and investors alike.
Awesome. Yeah, thank you so much for having me. And obviously if there's any founders listening, feel free to find me on LinkedIn, shoot me a note. Would love to chat. If you're building in the US or building in Canada, and same with on the investor front, if you're deploying into early stage, would love to have a chat. But thanks so much for the awesome questions and a great conversation.
Thank you. And thank you everyone for joining us on another episode of Unlocking Venture Capital. I'm here with Simon.